Hello, happy July. It is your favorite real estate consultant, David Keeter here. Market update. That's what we're doing. We're doing the market update July 1. So new data is out. Let's talk. We have price trends right now. So this is June 2024 to June 2026. So happy July. We have June data. This is Roanoke's residential market as a whole. We have overall pretty stagnant, stable pricing. So yes, it's year over year trending upwards in general, but right now we're in our perfect little seasonal typicalness. So we like to go and spike high in the summer months, and then our winter months. Roanoke's very seasonal. Winter's our lowest sales prices in general, and then summer, here we are, getting hot already, just trending up again like we typically do. And we're now sitting at a nice 342 median sales price. And of course, this is the active median list price. Active lists tend to be higher because the higher priced homes sit on market longer. But I thought it would be really, really fun to look at long-term trends. So yes, this is 2016 to 2026. Roanoke's just trending upwards that whole way. I did pull a lot of data. This is all the way back to 2000, and I believe 2 is my first data point here, and then up to 2026. We're going to come back to this. I want to show you something else real quick. This here, you are looking at average sales prices on a national scale. So national average sales price from 1990 to 2026. $96,000 was your average price of a home in America in 1990. And then in 2026, we haven't rounded out the year, but we're projecting a $423,000 average home price. Now, this blue teal line, this is important, and this is what I really kind of want to talk about. I've had this conversation a couple times in the last couple weeks, so I felt this would be important to bring to everybody. This is the average long-term trend of appreciation. So 4% historical appreciation year over year is the long-term average trend of home prices. So here you have 06 to 08, where clearly there was, the Great Recession. So home prices went down because it was a housing bubble that caused it. So home prices went down. And then this difference here, if that hadn't happened, this would be theoretically the price of houses that you would expect to see along that time. So obviously there was a big surge in home prices. We went above the trend line by a good chunk, 21% above trend. We went down. There was the housing bubble, the market crash. So we had home prices low and low and low until about COVID market. 2020, 2021, we finally recover and we get back to trend and then above trend out the gate. So then we've stayed above trend and we've kind of spiked and then a little bit of plateaued, and 4% is now trending in with us. So we're only 7.4% above trend right now, nationally. Now, locally, this is Roanoke. So the green one is I did the math, we have exactly 4.04% in the last 2002 to 26, the data I have, the average appreciation has been 4.04%. Now it does, of course, this is the in-depth version. This was appreciation year over year. Then, come along 2008. Whoop, not great, not great. Negative appreciation. We start doing well, and then we do stupid well in 2021, and then positive appreciation really for a long, long time. But this is, again, the 4.04% for us, not 4%, but 4.04. And then this is the actual sales price. So the purple bluish line is our actual sales price, our average, or median, this one's median sales price in Roanoke from 02 to 2026. So as you can see, we're actually not even above the trend line here in Roanoke yet. We were. We've gone down. Obviously, the Great Recession had an impact on us as well. We stayed down. COVID helped us out, and we've continued to come up and up and up. But technically, unlike the national data, we're not above trend yet. So take that to mean what you will. I could speculate with you, but I think that's plenty of information for your market update. I hope you have an excellent 4th of July. Happy 250 years, America. Talk to you soon.